key messages we have from our emerging trends in real estate. We recently published for Europe. It's a publication we're doing together with the ULI, the 18th edition. It's one of the 3 reports every year. One is for Americas, one is for Europe, one is Asia Pac. Asia Pac is also coming out soon, and also some trends we've published in other reports on studies like about German warehouses. That's a special journey, and about office use in Germany, the outlook from the occupier side. We also recently published the investor survey talking about yield developments of the last 6 months in the market, and then something about ESG, especially in the legal context. Yeah, going to the main trends on the next page. So the key message is real estate itself is still very attractive. So there is so much capital out there that wants to invest, and driven by COVID-19, we see that the allocation has not decreased, but it feels that it has partly also increased and focusing on special types of use. But of course, there are concerns about how can I stabilize and secure my cash flow from this real estate. This is, of course, driven by the economic, the uncertainty about economic growth in Europe, of course, but also globally. We just recently published our own study where we see in the EU a GDP decrease of 9.1% for this year. So that's pretty heavy hit. Of course, Germany is a bit more stable, but there are also a lot of concerns about business interruptions, health and well-being of staff, business liquidity issues. So a lot of concerns driven by COVID. But as I said, the capital is there. There is enough, let's say, interest in our asset class, which is great, but which is also not a big surprise for me personally. So on the next page, looking at what have we seen this year, especially if doing deals. Most of the deals that were signed and closed in the last months were started before COVID. So the deals from Q1 were a bit slowed down than in Q2, and we see the deal announcements in Q3 and Q4. That's mostly deals started before COVID. And of course, the big question is what will come to market now for the next 1 or 2 quarters. That's something we will discuss, of course, in the next 45 minutes. There is a big one showstopper is, which also comes down to capital flows. We have a big restriction on traveling. So we see that organizations are in a good position that have people on the ground, especially in Germany or in other locations in Germany. And that's also triggering the last point for 2020. There was a significant increase of national investment, saying that domestic buyers, German institutional investors buying in Germany, or more European buyers investing into Europe. So that was a clear trend driven by, let's say, uncertainty was one thing, but also purely by the travel restrictions we had. We have not seen so many Asian capital this year, or not so many capital from Middle East. But if you go to the next page, the outlook, of course, is that there might be a change. Europe will still be a significant and the most relevant investor for Germany and for within Europe. But based on the study we have done in the emerging trends, is that the Middle East investors might come back slightly, but especially the Asian investors will come back next year. We had a virtual client event for our Singapore-based clients last week, and the message was pretty clear that they are all there, the money is there. It was just driven by uncertainty and travel restrictions not to invest in Europe and especially in Germany. So that's something the general industry expects, that Asian capital will be heavily back next year, even a bit more than we have seen in 2019, because there's a backlog of all the investment strategies. So generally, the strategies haven't changed. The global diversification on the investment side, this trend is still there. If you look at Americas, we hear from several investors that they might focus more on local markets, especially in North America and in the US, where they see better opportunities compared to the German and Europe market. But of course, America will still be a significant piece, but a bit reduced compared to the years before. Looking at the what is the ranking of European cities, you see that the German cities, as in the years before, are 4 of the cities are under the top 10. You see Berlin as #1, especially because investors expect, or market participants still see rent potential compared to other European markets. Followed by, on #4 is Frankfurt, #6 is Hamburg, and #7 is Munich. It's the general sentiment that it's if you go for safe harbor strategy, Germany is a big bet. The additional markets we have, or city we have seen, is Stockholm within the safe harbor strategy. But still, there's so many national and international capital also going for the gateway cities, and that's why London is back on the top 10. Last year it was below, but on #1, and Paris. These are the mega cities, and especially Paris, of course, driven by the big infrastructure investments we will see in the next 10 to 20 years. That also drives the mega city trend into Paris and London. But as I said, Berlin, Frankfurt, Hamburg and Munich are the top locations within this ranking of European cities. And looking at the types of use on the next page, was a bit of a change last year in the emerging trends. 8 out of the 10 top investment classes were beds and sheds, so all types of residential, micro-living, senior living, etc. It changed slightly. Of course, residential is still high on the agenda. But we have seen, driven by COVID, about the uncertainty, lots of investors think, where do we get stable, secured cash flows? And that's why tech-driven asset classes are more on the agenda, like the data centers or the energy infrastructure or the communication tower, which is also a trend we saw in the last year, that real estate is also mixing up with infrastructure somehow. That's why we call ourselves, also our team, Real Assets now. And you are also called Real Asset Media. So that's the trend. Plus, from the types of use, of course, logistics is again high on the agenda, like last year, driven by the change in supply chain. We will see in the next years, and the life science parks, which are not really developed in Europe yet, will be a trend for the next year, the investors mentioned in this report. So on the next page, and one big theme we have seen, of course, already last year, but a significant further push is the impact investment, the ESG theme. I think it's on the agenda on all players in Germany, especially all fund investors, all asset managers have it on the agenda, the big fund managers, and we are supporting most of them on implementing and developing their strategy, because they have the clear view that the regulatory framework is pushing hard and will remain. ESG is here to stay, but the push also comes from businesses as our tenants, also from the consumers, that ask also our industry, as we are producing more or less 40% of CO2 emission globally and also in the EU. We are asked to have an impact here and change something. And the push also comes from the institutional investors. So it's a circle where you cannot say, I do not agree to the themes, or I can somehow try to avoid it. We have to move on the ESG agenda. And I think we are on a good track if you compare it with other European countries. My UK colleagues, for example, tell me that they have the feeling that the German investors and fund managers are pretty advanced on the ESG agenda. So that's a quick overview of the key results.